Welcome to another session of Knowledge Box. Today we will be touching how to manage your personal financial debt. This evening we have the wonderful Maureen Baidhi. Am I pronouncing your name correctly?
That's okay, it will pass.
Okay, thank you. I'll take that. Thank you for the grace. I'll be doing a little bit of a warm intro chat this evening, just talking about giving thanks and being present, keeping in line with our whole section, the psychology of success. So I'll go ahead and get into that. So be present, give thanks, right? So there's different elements to that. We have gratitude. Gratitude, a concept from positive psychology, whose goal is to build happiness and well-being, is an activity that can be used to complement psychotherapy. Okay, studies. For decades, there has been a significant amount of research and well-documented studies that have outlined the physical, psychological, and social benefits of expressing gratitude. These studies also suggest that anyone who practices gratitude can benefit even in the midst of adversity. Benefits. According to the world's leading expert on gratitude and author of gratitude works, Robert E. Emmons, being grateful is a choice and an attitude worth having, especially during a time of crisis. And in Emmons' research, some benefits were found. So the first one, and perhaps the most compelling, is the one that practicing gratitude is the most reliable methods for increasing happiness and boosting positive emotions, okay? And then in terms of the immune system, gratitude is also important for our bodies, building its fortitude and immune system, and also improving its physical well-being. It encourages us to take better care of our health in general, right? So gratitude is definitely, an important aspect of grounding oneself and having a foundation in order to to execute one's life goals. So just definitely just wanted to just touch on that a little bit. And some other benefits of gratitude is gratitude allows people to sleep better as they get more hours of restful sleep and wake up feeling recharged, okay? And then in terms of even resilience, gratitude makes us more resilient to adversity and to overcome traumatic events, right? And then when it comes to relationships, gratitude also reinforces relationships and promotes a feeling and compassion and solidarity. Okay, so that's another thing gratitude, gives us. Okay, and then when we think about just maybe some tips, we can leave with or think about in terms of how do I give thanks? How do I express some level of gratitude? How can this how can I start to practice this, right? How can I activate this? So here's a couple of quick little tips that you can do. Meditation, right? You can write, you can think, you can ponder, if you want to use a word like this, but you can just take a moment to just to unpack things that are going on in your life, right? Also, you can express, you can tell someone about your gratitude. You can share that with share the gratitude with the people who make you feel like you have gratitude to share, or or even if it's your religious, your source, your connection with source, your connection with God, depending on your religious beliefs, also expressing that gratitude to that source as well, right? So just definitely just wanted to just kind of just touch on, how this can be an aspect of definitely grounding oneself when it comes to having a really solid mindset. And you're going to need that when you're trying to establish new financial goals and you're trying to get over those financial hurdles, because I can imagine it's certainly challenging. Me personally, myself, I've had my own challenges with financial literacy and financial balancing. I was a traveler for many years, and a lot of times I didn't always have stability because I was traveling, right? So But often I would have to express a little bit of gratitude for the opportunities that I had in order to ground myself, and then to start to plan and to financially plan properly for the future. But by first having a place, a groundedness, and a level of gratitude, I could start that process. So yeah, so just wanted to just touch on a little bit of that, just to get into things today. Nothing too deep today, but just a little bit of the mentality of the mindset of getting into financial planning and financial literacy. So with that being said, I want to go ahead and we're going to pass it over to Maureen. Maureen, she's going to be touching on debt management this evening, of course. So definitely enjoy this session. And if you have any questions, stay to the end. And Maureen will be sure to answer your question.
Okay, thank you so much, Danny. So my name is Maureen Baidhi, and today we'll be discussing, or I'll be presenting, debt management. And at the end of the presentation, you're all free to ask me any questions, or after the presentation, whichever you're comfortable with, you could send Danny a message, ask a question, and I'll be able to answer it. So today it's debt management. And if we could go to slide number 2, please. Okay, so what is debt management? So in a simple language, I had to break it down for everyone to understand. So debt management is the way to get your debt under control through budgeting and financing planning. So in this session, we're gonna keep in mind 2 words: budgeting and financial planning. The next slide, please. So types of debt, just give me 1 second. Okay, types of debt. So we have 2 categories of debt. There is bad debt. This is money borrowed to buy maybe from the credit cards. This is money you use and you don't pay it off. And then we have good debt. This is money borrowed to buy, for example, a house. So reducing your bad debt with the highest interest rates should be your priority. Within these 2 debt categories, there are also other types of debt. So we'll go ahead and discuss the types of debt. So the first one is the secured debt or loan. Loans, these are loans that are backed by assets or collateral. The collateral secures the loan. For example, mortgage is secured, it has a collateral to the loan that you're borrowing. So this is a secured loan. And then we have unsecured, money borrowed with no need for collateral or assets. For example, the student loan, traditional credit cards. Here, your credit will play a very, very big role because you're not putting anything down. So the lenders will want to say, are you good to do business with? Can we trust you with our money? So usually this is a traditional method, usually on credit cards, and yeah. So this one, you don't need a collateral. And then we have the revolving. 1 second. We have the revolving. This is another type of debt you can change and pay down over time repeatedly, as long as the account stays in good standing. For example, personal line of credit or home equity. This you could get at the bank. I know most of you could have gone to the banks and they've recommended if you could get a line of credit or a revolving home equity loan. These are loans with very low interest rates and they're revolving. As long as your account is in good standing, you can continue using this money and pay back. If you don't pay back on time and everything, then you'll need to pay interest. Then the other type of debt is installment. This type of debt is closed-ended. It's paid over a fixed period of time, usually by making equal monthly payments according to the agreement. The key word here is the agreement. If you don't pay according to the agreement, then the interest rates may go higher, or you breach the agreement and they may cancel your loan, and it would go maybe into collections, and they may be calling you all the time. So we assume in this session that everyone has had a debt somehow, you know, in another way, or maybe a student loan, or somehow have a debt. So we haven't gone to the session of how to obtain the debt, because we are assuming you already know about how to obtain the debt. And if you don't know, probably we'll have this session for how to obtain a debt or a loan in some other session. Next slide. So how to manage debt. We've seen the category of debt, we've seen the types of debt, and we have seen what is debt management. So now, how to manage debt. So this is what you should do. Debt needs to be put into two categories. That's the cash flow and the borrowing cost. Understanding where you are allocating your money is important as what the interest rates are on various debts you are carrying. You have to understand how much money do you get, where are you locating it, how are you spending it. This is very important in the first step of managing your debt. Next slide. The next step is how your debt, know your debt load. Knowing the sum of money you owe is important because it will affect your budget, the way you spend and what you spend on it. Right now, most of you know that there's inflation. People are trying to change stuff here and there, especially in their spending. So you should know, okay, if now prices are very high, how am I going to manage my debt? How am I going to still pay my debt and also have some money for myself? So this is very important. Another one is staying informed will help you create realistic and measurable goals or decreasing your debt load. Calculate your debt to income ratio by comparing the amount you owe to the amount you earn. This will help you to know whether your load is more than you can afford. One second. So, calculate your net worth is another way of how you can manage your debt. So, your net worth is the total value of your personal finances. How to calculate your net worth is net worth will equal to assets minus liabilities. This basically means assets minus everything that you owe, including mortgage, student loans, and credit cards. Next slide. Okay, so debt snowball and debt avalanche. These are also other types or other ways of how to manage your debt. So I'll first discuss the debt snowball. This is a way of paying off debt by prioritizing debt based on their sizes. By paying off small loans first, you will pay your debt off earlier and reward yourself psychologically, because then you'll know you have paid off a debt. It will psychologically, it rewards you. You will feel motivated and continue paying off your debt when you can see visible progress. The debt avalanche, for this method, you'll first pay off the minimum payments on each debt account, then start paying off the debt with the highest interest rates using the balance of the money. This strategy helps to pay off your debt quicker while reducing overall interest. I prefer the debt avalanche as me because you're paying off all your debt minimum interest. And then if you have something remaining, then you pay off the highest with the highest interest rate, other than the first one. But it also depends on what your debt is. The next slide. Another way to manage your debt still is monitor your current cash flow. Keep track of what is going in and coming out of your bank account. To understand what you have to work with. It doesn't have to be your bank account. How much do you earn? Keep track of that. Take an inventory of what you owe. Some people, after getting in too much debt, they don't even want to look at what they owe. Like, they don't want to see the reality of what is owed. So doing so will allow you to focus on your highest interest rates. Paying off high interest debt first allows you to reduce your overall interest costs and free up additional cash flow sooner. Credit rating. So credit rating is very, very important in debt management. So it is a tool used by bank or other lending companies to determine how risky it is to do business with you. This gives lenders a snapshot of how well you manage your money. So better credit rating means you are more likely to qualify for a loan or a credit. A higher credit score gives you better options and chances of qualifying for a higher credit limit or lower your interest rates. I have seen people have very bad credit. When they work on their credit and their credits are good, the debts they've been having with very high interest rates, the interest rates will come down. So if you want to know your current score, you can request a copy of a credit report and score from Equifax or TransUnion. Knowing your credit score will help you prioritize which debts need more attention and plan the order you pay your debt accounts in. Debt consolidation. So the process of combining debt consolidation is the process of combining different debts in one loan. So some people don't know this, that you can have, let's say, 5 loans and you combine them in one. So the benefits of this is makes managing your debt easier by eliminating the hassle of making multiple payments. Because you may forget, since you're making multiple payments, you may forget which one is due when and when I should pay which. So debt consolidation will help you with that. Also, it can help you pay down as quickly as possible, pay down your debt as quickly as possible. It also allows you to pay down on your principal. So you aren't only paying interest, because some pay minimum payment. Basically, they're just paying interest, and instead of paying down some to their principal. Debt consolidation will help you with that. You can customize your payments to a schedule and an amount you can manage, for example, monthly or bi-weekly. Also, debt consolidation helps you to balance or increase your oncoming cash flow needs with the goal of becoming debt-free. Credit counselors. I don't know if most of you know, but there are so many debt counselors because some people are afraid to even ask because they know they have so much debt. They're afraid of asking, where can I get help? You know, so they just keep it to themselves, and then you see they've gone all in the wrong direction. So they are credit counselors. If the debt is a recurring problem in your life, please speak to a professional credit counselor. They will help you to manage your debt, but also the habits and pitfalls that commonly lead you into this situation. For example, you may be a big spender. Credit counselors will help you say, okay, you're spending so much here. If you could reduce your spending and you put your money you're spending, put it on this debt, you know, it could help you. So the credit counselors will help you with this. And then they also help you create a debt reduction plan. A plan will improve your cash flow and help to reduce your debt sooner. You can visit your local bank branch or talk to a credit counselor for further assistance. In my case, I've used one from Royal Bank. It has a very good one. You don't even need to go to the bank. You can visit their website as indicated on the slide, and you just put in some information that they need and they will give you a plan. This has helped me a lot, and I know it could also help you. Another way of managing your debt is seeking financial help. So I'll go quickly through this is debt relief orders. meet with a financial advisor or debt counselor. They will help you develop a money management strategy that will help you manage your debt effectively. Research debt relief programs provided by the government of Canada, like consumer proposal, because not everyone can pay their debt, because some can have so much debt that they need help. So the government of Canada has come up with a consumer proposal. It's in the Bankruptcy and Insolvency Act, has as a debt installment program available. So it's available for you to use. This one is you're not filing for bankruptcy, but then you're paying half of the debt that you have, which all your creditors, all the lenders will divide among themselves. Let's say if you have 10,000 in debt, this program will help you pay, for example, 5,000 to all these lenders, and it will, manage your debt and it will go away. So another one is bankruptcy. Not everyone wants to get to this situation, but sometimes it's what's best for you. You may have gotten into so much debt that basically your cash flow, what you earn, you can't get it out, or you can't get out of it even in 20 or 30 years. So it is better for you to have a fresh start. It's not what is recommended, but if it is what it is, then it has come to bankruptcy. So you could file for bankruptcy. Your credit counselor will help you to see if this is the right option for you. And when you file for it, your debt will go away. But for the next 7 years, you'll be in bankruptcy. Like, it will be very difficult to get loans or credit, but it will help your debt to go away. So before filing for bankruptcy, think about your overall financial situation if this is what you really want. Next slide. So I'll discuss briefly the most mistakes people make when dealing with debt. One is not seeking financial advice. People feel embarrassed about their situation. As I said before, people would think, oh, I have so much debt. How am I going to talk to a financial planner? How am I going to talk to a credit counselor? Please don't feel embarrassed, because it is eating you inside. Go speak to someone, go to your bank, go to your financial planner, and you may come up with a plan on how to manage your debt. Second, the extra spending or making choices that cost more money. For example, going to bill lenders or payday loan companies. I've seen so many people run to payday loan companies because they have a visa payment coming out, they have a mortgage payment coming out, they have bills that they have to pay. You're going to these payday loan companies, but remember their interest rates are very high and you're adding loan to loan. That's a mistake that some people make. Then another thing is not taking responsibility. Please take responsibility for the debt that you have. You created the debt, sit down with your bank, with your financial advisor, and come up with a plan. As I said, there is a plan, a reduction, plan for your debt. They'll help you at the bank if you take responsibility for your debt. Lastly, not getting insurance on debt accounts that offer it. I don't know if most of you know that in most cases, when you have loans, they'll ask you, there are some loans they'll ask you, do you want insurance on this loan? Some people opt out of it, but it's very, very important that you take that insurance. Some insurance will be, okay, we'll pay for you 3 months. Let's say you lose your job, or let's say you get sick and you can't afford to pay your debt, or maybe you're in an accident. All these, please take this insurance, because it will pay for you according to the agreement that you have for them until you get back to your feet. Thank you so much. And this is it for today.